Today, Wall Street will find out a clue to further policy move of the US Fed. Investors are anticipating fresh inflation data and a weekly update on the US labor market. InstaForex analysts will guide you through a stream of news. The US stock market has gained ground in the first half of the week. Investors are optimistic ahead of the US inflation data. Major stock indexes closed higher yesterday. The Dow Jones climbed 268 points, or 0.8%. The Nasdaq showed the strongest intraday gain of 1.76%. The S&P500 grew 1.28% yesterday to close at 3,969 points. The benchmark index is traded in the green in the New York pre-market. The S&P is expected to trade in the intraday corridor between 3,920 and 4,080 points. Stocks of companies with a huge market values propelled the overall growth in the stock market yesterday. The Nasdaq closed with gains for 4 sessions in a row and the best results since September. The real estate sector and the retailers showed the best performance. The stock market cheered up in the recent sessions amid the hopes that the US Fed could moderate its aggressive monetary tightening after 7 rate hikes. Goldman Sachs started layoffs of its employees on Wednesday. In this context, the bank's shares rose by 2%. The shares of Bed Bath & Beyond surged by 67% yesterday and encouraged a broad rally of meme stocks despite the gloomy financial picture of the retailer. Today, its shares rocketed by another 21%, extending growth for 3 sessions straight. Netflix added 1.67% in the pre-market because Jefferies upgraded its shares to the buy rank. Investors are monitoring Disney shares as well. Walt Disney activist investor and billionaire Nelson Peltz entered a fight with the entertainment giant as it rejected his build and board seat. Nevertheless, the inflation report for December is dominating the headlines today. The highly anticipated report is ruling the market, sparking off volatility. The annual inflation rate in the United States slowed down for 6 months straight and slipped to 6.5% in December. It's the lowest reading since October 2021 and also matches the consensus. The CPI edged down 0.1% from a month ago, making the first decline since May 2020 and surprising expectations. Analysts had projected a flat reading. The market had more optimistic hopes, but all in all, traders learned what they wanted. Inflation has been losing its grip. Consumer inflation topped out at 9.1% in June and eased to 7.1% in November. Another decline to 6.5% in December reinforced hopes that the US Fed will be cautious about the next rate hike. The market is betting on moderate rate hikes despite the hawkish rhetoric of some Fed policymakers, and Wall Street gives priority to public speeches but not comments of policymakers. The common thinking in their remarks is that further moves will depend on macroeconomic data. In fact, the red-hot CPI is still far away from the Fed's target, but the market is overwhelmed by optimism. Interestingly, the best and worst of the S&P in 2022 were related to the publication of inflation data. Hence, the CPI released today could shape market sentiment for the months ahead. There is a fly in the ointment. The stubbornly strong labor market might spoil the euphoria in the nearest days. The number of first-time jobless claims fell by 1,000 to 205,000 last week, way below the consensus of 215,000 claims, the latest score and the lowest in the last 3 months. The labor market dents the efficiency of the Fed's policy moves. The US dollar index turned sore before the CPI release. It shed 0.3% and slipped below 103 points. After the publication of the CPI report, the US dollar index escalated losses and skidded to 102.70, and the intraday corridor for the index is seen between 102.10 and 103.20. The US dollar index traded steadily in the pre-market, but it weakened in the New York session. The yen advanced on Thursday on the back of expectations that the Bank of Japan would consider side effects of its ultra-loose monetary policy, and the yen strengthened by 1.3%, and other major currencies also gained ground against the greenback. The inflation data came as a no surprise, but it was bearish for the US dollar. Indeed, the hopes for the dovish shift dealt a blow to the US dollar. Investors are now revising their forecast in light of the fresh inflation data, the previous speech by Jerome Powell, and the hints of other policymakers about the importance of economic data before the CPI release. Susan Collins told the New York Times that she advocates for a rate hike by 25 basis points. Meanwhile, the US dollar finds support only from the healthy labor market, but weekly unemployment claims are not enough to prop up the dollar's rally. The Canadian dollar is trading flat at around 1.3400. Rising oil prices gave the loonie confidence. Today, the USD CAD pair lost 0.28% before the inflation data. Then the currency pair climbed to 1.3370. The intraday corridor is expected from 1.3340 to 1.3400. Energy demand has been boosted by the prospects of reopening China's borders and the soft US inflation data. This is bullish for commodity currencies, including the Canadian dollar. Benchmark oil grades jumped by 3% on Wednesday as investors dispel fears about a dismal outlook for the global economy. Today, Brent crude rose by 1.2% to trade at $83.69 a barrel. WTI added another 1%. Soft landing in the US and in other economies, accompanied by robust economic recovery in China, could stimulate beyond demand for oil and supply the Canadian dollar. Bitcoin has been extending its growth for 5 days in a row. Before the US inflation data, the token hit 18,370, the highest level in months. Later, it settled at $18,200. Altcoins are trading mixed today. Obviously, the only market catalyst today is the US CPI, so the news on the crypto industry is taking a back seat. Bearing in mind the direct correlation with the Nasdaq and the inverse correlation with the US dollar index, the flagship crypto is set to trade higher within the intraday corridor between $18,000 and $19,000. And we wish you to manage profitable trades amid extreme volatility. See you online tomorrow.